So, hello everyone, welcome to another episode of The Clueless Capitalist with me and Osman. Today we're going to be talking about one of the investments that we've made sometime last year in a startup that is based out of Bangladesh. They are called Shuttle, and what Shuttle does is it provides mass transit for commuters in Bangladesh. So, what we're going to do is we're going to be showing you a little bit about what Shuttle does. We're going to share what we liked about them, why we invested, and how they've pivoted during the pandemic, especially since it impacted the movement of people across Bangladesh and in general, where all of us were spending a lot of time at home in lockdown. So without further ado, Osman, maybe you could bring us through what Shuttle does.
Yeah, so Shuttle's a really interesting company in that they do stuff which we're really familiar with the rise of and advent of the likes of Uber globally and the rise of Grab here in Southeast Asia. We're familiar with what those types of companies do, but as with all of these, not one size fits all, and countries like Bangladesh have got very unique requirements and very unique demographics and very unique challenges where an Uber might try and enter into the Bangladesh market and really struggle to gain traction and adoption, whereas it's working perfectly fine in Europe, North America, even in Southeast Asia, but in certain countries it just doesn't take the traction that you would expect. So these guys are in that type of space, and rather than me just kind of like talking through just in general what they do, I've actually got their pitch deck that they have. Nice. And I'll just go through that, and maybe that will explain to you why we think they're unique, why we think they're different, and also it'll highlight some of the key risks as well, because I think with angel investing, one of the things that we're doing is taking a significant risk. We know that some of these companies may not succeed, they may kind of go to nothing, and you'll begin to see the pitch and you'll understand and you'll probably question, hang on, there's that risk, there's this other risk, why are you still going to put money in? And it's the nature of a beast, unfortunately. You just don't know where the future will unfold, and when we go through the deck, we'll explain that. And I think what might be a good idea is actually bring in the co-founder as well and the founder and get them to walk through the pitch deck as well to hear how they would present that to you, and then we can do a Q&A with him as well, and I think that will be useful for everybody.
Definitely, yeah, I agree with that.
Okay, so let me just share my screen. You can see that this is their pitch deck. You can see that now. This is a pitch deck that was only presented a few days ago, actually, in Bangladesh to other potential investors. And from the pitch deck that we had, a lot of things have changed over the year and a half that we originally invested. So pitch decks do change. Companies do what they call pivots. You know, market changes, they find out that something didn't work out, they have to quickly change, otherwise they'll die. So we expect that the company that you invest in from day one, well, you might like the idea from day one, but where it ends up in day 2 or day 5 or day 10 is going to be different. If you look at the way Uber started out, it was very different to what it is today, right? And that's the nature of the beast as well when it comes to investing in early stage startups.
I think one good example just to add to that is I was just watching a video yesterday about this startup called Soylent, and what Soylent does is it provides like it's essentially a meal replacement. It's a powder, you add water and you can just drink it. And what was interesting is that startup initially started off by, I think, dealing with hardware equipment. So that was their initial plan, but somewhere along the line they changed and they become completely different. It became a meal replacement startup. So that just adds to what you're sharing, Osman, about how what you may invest in and what goes on and what how it evolves. It could be completely different.
Yeah, and I think that reiterates some of the points I wanted to make later on about why you invest in certain companies. Sometimes it's not the company, sometimes it's the founder. In fact, most of the time it's the founder. They're the only consistent element within any kind of investment thesis that you might go with. Do you trust that guy? Do you trust that team? And do you think they can execute? You know, have they got the staying power to really execute on a vision and a dream that they've presented to you? So anyway, let's just quickly go through this. I mean, their intro is really very straightforward. It's about making daily commutes convenient and affordable for middle-income people. So they have a very clear view as to where they sit within the whole ecosystem in Bangladesh. They're looking at clubbing together 4 to 10 people and using cars or minivans to carry people, and they charge significantly less than regular ride sharing, the likes of Uber and Patel, that are significant within the region there, right? So this gives you an overview of where they started off, what they were doing. So when we first spoke to them, they were originally Shuttle for women, this whole B2C component, right? So they were selling directly to the consumer market, and they were addressing a real particular niche within a growing segment of commuting buying power, right, within Bangladesh. Biggest problem in Bangladesh is that it's a diverse and open economy. Women work, women travel, public transport's terrible, and unfortunately, with the nature of that environment, women are subject to sexual harassment on a day-to-day basis, and a few of these guys wanted to really put a stop to that and give safe commuting capability for this particular segment of the market, and that's actually what drew me in. I've got 3 older sisters. If this was an issue, I'd want to have something that would give them safety and comfort if they were going to work every day. So that's where we originally heard from them. Then the pandemic kicked off, and there was a slight pivot to expanding their Shuttle for Business. So they've got two business streams now. They've got Shuttle for Women, which kind of died down a little bit during the pandemic because a lot of the commuters were going to university. They were university age students and young women going to work, and with the pandemic and the lockdown, it became a problem. But the businesses operating in Bangladesh, they were still operating, and the problem they had was they wanted to get reliable and safe commuting capability for their employees, and that's grown up over time. And they've now also, in 2021, they've launched a unisex service as well, right? So they've grown their revenue over time, so it's been consistently growing in the right direction. And they're doing quite well, right? So this is just an overview of where they are and what they've done. But like I mentioned earlier on, the transportation in Bangladesh is unsystematic and unsafe. Now, again, you've got to be culturally aware that, you know, for us in countries like Singapore and in Europe, clambering onto a bus and having close proximity to the opposite sex is actually quite normal. You will touch people on the shoulder and stuff like that, but for cultures and countries where it's not really acceptable, this type of picture would typically depict something which is socially unacceptable, where people are harassing women when they're getting on and off public transport. So you know, what they're trying to do is now address the public transportation, but there's a mix between ride sharing, which is too expensive for your daily commute, and public transport, which is unsafe and uncomfortable. So they're trying to meet that growing middle class, where there is a requirement for something safe and comfortable with the convenience of ride sharing, right? So they've compared it to how they sit with the competition, The competition being public transport, rickshaws, motorbikes and cars. Some of these things are kind of like highlighting where they sit. And what they're trying to do is they've got a price play here. It's very clear. They're not claiming to be like the most super convenient or anything like that. They do have a very clear, we're cheaper than the others as well, right? They're going to charge less than a third of the price of regular ride sharing, like clubbing people together. They've got the women only option. You can pre-book your rides, and they've got established routes as well, which they do. So it's a bit like the benefits, all the benefits of having Uber, but without the overhead cost of an Uber, right? So they've got a workflow as well. They've got an app that you would expect. They've got a way to pre-select your routes, so they've got that, and they've got the ability for subscriptions, which is interesting because that allows people to pay up front, and they've got credits, which from a cash flow perspective for a business is pretty nice. You get money up front, and then you can work out what to do with it when it's in your bank account. So that's good. And like I mentioned, their price play is very different. Uber, a typical ride is $7. They're playing in the $1.60, just slightly above public transport. So if you can imagine, they're providing the safety and convenience of a minivan or a regular sedan car, and they're providing it at a price which is similar to public transport. Right, so they have a very unique space. Now, obviously, biggest issue that you typically see here when you look at this, and the biggest red flag is Uber's got big pockets. They're multi-billion-dollar company. If Uber really wanted to play in this space, they could absolutely do that. They could decide, okay, we're going to kill the competition. What we'll do, we'll just reduce our prices from $7. We'll do a promotion. Everybody can travel for $1. Right, and they could literally eat into that. Now, there are reasons why we think that that's not going to happen, and we'll go into that. The deck actually explains a little bit about that, gives you an insight into that, but it's a real threat, and it's something to be aware of. And there's no risk if you're looking for a reward. And here what we're expecting is that Uber's playing in its space that it knows really well and will continue to do that, and Shuttle will operate in its space. You don't find Uber suddenly saying, hey, look, we're going to do bus rides now. That's not what they do. And this isn't something that they would necessarily do either, but they could do a price war and make sure that people ditch Shuttle. And like most competition, they usually don't have the deep pockets to ride out a price war. So it's always a risk to be aware of. But yeah, they've got the B2B component, which again is something that sits quite well. It gives them some diversity, so they're not at complete risk. So they've got great relationships with established businesses in Bangladesh, where they can establish a fixed revenue and fixed payments for that component. So they're not just relying on one segment of a market. They've diversified their risk, which is good to know. And you can see that their ridership has been increasing over time. Now, this is their metric. This is what they measure their success on. So as you see, the average daily rides per week is growing on a consistent basis. And that's kind of what you're wanting to see in any kind of early stage startup. Other metrics, what are their metrics that they're measuring for success? How are they doing with that? Are we seeing continued growth and forecasted growth as well? And as you can see, the monthly rides are going up per customer. The retention rate is very high. Basically what they're trying to say is that if people use their service, if 100 people use the service, 95 of them will use it again and again and again. Questions to ask really are really just lifetime value. How much are they spending over their entire lifetime as a customer? If it's $26 per month, how many years do you think you'll have that customer for, and how much will they spend with you over that time?
And I think one question that I'm also curious about with regards to that particular slide, right, is how are they currently acquiring their customers, right? And what could they do to amplify that further? right?
Yeah.
So I think that'd be an interesting question to ask Riyasat when he comes on.
Great. Yeah, that's a good question to ask. Cost of acquisition, customer acquisition cost is another key metric that angel investors want to know. Like if you're generating a revenue of $26 per month, how much is it costing you to get that? Is it $1 or is it $50? So is it going to take you 2 months to recoup that cost? Those types of things are really important, and they're the type of things. Lifetime value, customer acquisition cost are really important metrics for us to know. The other things to know are really things around the revenue and how much margin they're making on that, and how much burn rate, how much are they still burning, are they cash flow positive or not. So they've got the active B2B clients. These are their customers, so typically in a pitch deck you'll see that. You'll see who their main key clients are. You can see some significant large logos here: British American Tobacco, Standard Chartered, HSBC, other startups like PrioShop that we're familiar with, that we've talked to in the past. But these are significant players in the Bangladesh market, and the fact that they're on here, what that just tells you is usually people are creatures of habit. They'll wait until somebody else has done it and then they'll follow. So if you've got some notable clients, you'll typically find that other businesses will follow through, because it becomes a perk, it becomes something that is proven and it's de-risked. With these types of clients, if they've got them on board, it means that others are likely to follow through as well. The cost of acquisition is going to be a lot lower, but time to acquisition is going to be shorter. Right, these first few can usually take a really long time. You could be talking, in some instances, maybe a year, 18 months to get that first logo. But then after that, it's like shelling peas, and you'll get lots and lots more coming through because you've got that first client. So that gives you some comfort. Feedback, that's another thing. They've actually got here their Play Store rating. So they're able to demonstrate that people do like their service and they do like their app. That's one thing. And then in terms of what their market size is, they're looking at $13 billion as a market size in that area for intra-city commute. And it's interesting to note, everyone's talking about, the next Uber and the next unicorn or the next decacorn. Here we're talking about a country with 200 million people. People always say Bangladesh is a basket case. Why are you investing in a country like that? Well, it's 200 million people. If you're looking for a unicorn, it's very easy to get to that. You just have to look at China, and you look at the amount of billion-dollar valued companies that there are just serving their domestic market. You've got the same here in Bangladesh. A population size of 200 million, you're easily going to get to that.
I think one thing to note is also like what you were sharing earlier, Osman, with regards to like Uber and Grab. I think those serve like the middle class, upper middle class, and the higher percentage of society, whereas the masses aren't able to afford those kind of ride services. So I'd say Shuttle is playing in a very interesting place, and that's one that is going to grow massively, and especially if they can realize this vision of implementing it in other developing countries. I think there's a huge market and huge potential to be captured there as well.
Yeah, and I think you've absolutely hit the nail on the head. What we're looking at here is a very interesting pivot point now that we're seeing. The change in demographics in countries like Bangladesh, Pakistan, Africa, just in general Africa across the board. What we're seeing is the rise of the middle class. There's a significant chunk of people that are being elevated from poverty into the middle classes, and they've got higher spending power, but they're not extravagant. They're not in the top tier of elites, but that big expanding capability of spending power in the middle classes is where these guys are playing. And this is something that's being repeated in different countries throughout Africa, throughout South Asia, throughout Southeast Asia. And this kind of underlines that. This is a proven business model. It's not something that's just been made up, and it's very unique. As much as every country will say that they are unique, in reality, no. We've seen this before so many times. People trying to tell you that their country, their business vertical or business segment is very unique. In reality, there are lots of other places where you see the same issues. Here we've got Egypt and Pakistan and India. They've all had this similar type of issue, and they've been addressing it themselves in their domestic markets. And it finally comes down to whether you like the founders or not, if you're going to invest in some people. We've spoken to these founders a number of times, both really articulate, very clear about their vision. Do I like them? Absolutely, yeah. If you don't trust them, if you don't like them, if you kind of can't get to the answer clearly after asking them one or two times, chances are you're not going to invest. But if they're very clear about what they have, they're very clear about the challenges that they have and how they're going to overcome them, and you believe that they can execute, that's basically it that you're looking for. And here you can see their backgrounds as well, what they've been good at, what they've worked at, are they established. We've spoken, both you and me, Razi, we've spoken to Riyasat a few times now. He's very approachable. Even when he's running a business, he's giving us updates as to what he's doing. We won't harass him or anything like that, but it's good that he approaches us proactively, lets us know what he's doing and what's going on.
One thing also that I appreciate also when it comes to founders is to get a sense of how committed they are to the work that they are doing. And because as an investor, when I invest in something, I want to make sure that I invest in a company that's led by people who are very dedicated to what they're building, and I know that they are in it for the long run. So like with Shuttle, what I liked was that they are driven by their mission, the initial mission of providing safe transportation for women, and I think that is a mission that still drives them, and that's something that showed me that they have a mission, that they have a commitment to a cause, and they're dedicated to building that particular, committed to realizing that vision that they are working towards. So that's something else that I think we really appreciate, is that these guys are in it for the long run and they're committed to making it happen.
Yeah, absolutely. The other thing that you would typically want to know is who's the core team. If any of these people left, what would be the impact to the business? So it's nice to know and put faces to names, but also where they've come from. And you can see the reason when I mentioned earlier on about, Uber could really eat their lunch if they really wanted to. Well, some of these people are from Uber, and they've got an insight into how the competition would work, whether there's an area for collaboration or co-opetition or something like that. And this gives you an idea of what their background is. Do they understand the market? Do they understand the industry? Do they understand the challenges that you would have? That's one thing. Who's typically invested, like the significant investors? So there's a group of angels that have clubbed together with Bangladesh Angels, a whole bunch with Accelerating Asia. We saw their pitch deck as well on Impact Collective. That's available on YouTube if you look up Impact Collective. And then some of the experts who have invested, right? So you and me aren't experts in Bangladesh or the industry, but somebody like Ghazi, for example, is coming from that industry and he's invested. So if he's got insights into how the competition works and he is investing into Shuttle, that gives me some comfort that, this risk element that we saw earlier on has been mitigated, or somebody's seeing something that I don't see, right? And in this case, he's coming from, worked with a competition and understands what their mindset is. Are they likely to try and kill off Shuttle? Who knows? But if there's somebody from that industry and from that competitor investing in Shuttle, it gives you some comfort. And same for Food Panda. You would think, what's Food Panda got to do with Shuttle? The fact that it's a logistics company, basically, in essence, that's what they do. It gives you an idea of that person understands what the challenges are for getting from point A to point B in a particular location in a city or in other cities in Bangladesh. So that gives you some idea of the type of insights that some industry experts might have. And then obviously this is their forecast, what they want to achieve. So they want to get from where they are with 800 rides per day with 70 routes, and they want to grow that significantly by 2023. So they've got a 2-year plan. And how are they going to do that? They want to develop a strong moat. They want to have basically get that first mover advantage, get lots of routes and timings that just make it difficult for other people to replicate quickly. And that's their pitch deck. Now, I've just walked through it. I think it'll be really good to actually have Riyasat go through that in more detail and share with us and answer some of the questions that we might have on the back of that. I think we just need to talk about how they changed. So they changed from being a female-only service, which was really enticing for us as impact investors. Mm-hmm. We want to make positive impact to society by investing in companies that are going to bring about change. That's really important to us as a personal level. The issue you have is that business will go bankrupt if during the COVID-19 pandemic there was a complete lockdown. That particular segment that they were addressing completely dried up. Exactly. When there's a complete lockdown, there was nobody there. So do we really still insist that the founders try and maintain that role of just doing female-only rideshare? It doesn't make sense. Ultimately, the impact investment thesis has to be pivoted to some extent, because what's the point of having a company that's gone bankrupt? There's no impact then, right? So for us, it's realistic and it's valid to understand that the founder needs to have a business that survives. So as soon as that happened, that's the benefit of a startup. They understand what's happening. They can quickly change and address new markets. They've addressed the B2B segment, which is still there and still has a demand. Public transport's not viable because it's unsafe, especially in a pandemic. So they were providing ride shares, fully sanitized at that time. Basically for every trip they did, they would sanitize the vehicle and then take it back out onto the road, and they were doing that on a regular basis, and they built that relationship with those B2B clients, and they've established a long-term relationship, right? That needed to happen, otherwise the company would have gone to the wall. And the fact that they've pivoted so quickly and effectively and grown at the same time gives me extra comfort that these guys can execute in their vision moving forward, right? The fact that they're fundraising to actually do more customer acquisition gives me an idea that they have a clear vision of what they're going to do with the extra money that they're fundraising for and how they're going to achieve that vision. For me, it's still all upside at the moment.
Yep. Yeah. I think when we get Riyasat on, I also like to hear what you mentioned about how they pivoted, what the pandemic was like for them, what went through their minds and how they made the decisions in terms of pivoting to what they did. And I also like to hear how things have evolved with the pandemic. Earlier you mentioned that there are players like Uber in the market. How has the market evolved over the past year and a half since we invested? And also find out from them what are the plans going forward, in terms of getting more rides, like what you're mentioning, right? They want to acquire more customers. So I want to hear from him what are some of the things that they are doing to get more customers, maybe some of the interesting things that they're doing. And I think the key, having that mission that they originally started with of providing safe transportation for women, I think that's still there. It still drives them. I just want to hear how has that evolved? How are they also still really pursuing that mission? So I want to hear some of those things from Riyasat when he does come on for the next episode.
Yeah, and for me as well, the whole concept of impact investing that's one thing. The element of giving safe transportation for women. The other element for me for impact is I'm funding this company, I'm an investor in this company. For me, is it providing meaningful employment to the domestic workforce in Bangladesh? Because at the moment, we all talk about, we all have this tendency of not in my backyard. I don't want people, economic migrants coming to Australia, Europe, UK, US. There's a lot of people who don't want that. How will create meaningful opportunities for people back home? If we're not willing to invest in these types of markets, then you would do exactly the same. If you had a wife and children to look after, you would go where the meaningful employment is, which is in Europe, North America, Australia, New Zealand. And if you want to have all ships rising with the tide, you have to have some element of equitable distribution of wealth. You have to have a real meaningful investment in a country where these types of companies are creating new opportunities and new opportunities, not just for employment, but for talent development. There's people who are learning coding, they're program developers, project managers, software developers. They're all developing their talents in country, and they're being used in country. Now, typically what happened in the past, these people would get their skills, get their qualifications, and then move abroad.
Yeah.
Right? And the interesting thing that I've noticed with Bangladesh in particular is that there's a lot of a diaspora in North America, in Europe, moving back to Bangladesh because the opportunities are there. You're seeing that with China as well. You're getting lots of people in North America and in Western countries who are Chinese ethnicity are moving back to China to make their wealth at home, right? So again, this is all about, it's not just about preventing economic migration, it's about giving opportunities equally to everybody. And that for me is also another element of impact investment. If we don't invest and if we don't believe in it, then why should we then have a kind of an opinion that they shouldn't be travelling to another country to achieve their economic goals outside of their domestic market, right? So I think companies like Shuttle, they're real, they're addressing a problem, and they're creating opportunities for their own talent pool within the country, and also enticing people back to their country. And most people say, you've heard people say, if you love your country, feed the people. These guys are doing it in the most wholesome way possible. They're creating opportunities domestically. These people will then feed their own domestic population through the wealth creation that's developed there. Yeah.
Okay. I think we're gonna be in the next episode. We're gonna have Riyasat. We're gonna be getting him to run us through a typical pitch, and we're going to ask him a bunch of questions regarding what we have discussed today. So catch the next episode of The Clueless Capitalist with me and Osman, where we're going to be speaking to the founder of Shuttle, Riyasat. So we look forward to seeing you in the next episode.
Catch you next time.
Subscribe now.